So now we're going to move on to the Series B for the no dilution provisions, just to let you know how to calculate all of it. Same drill as the last one, nothing really changes except we just add a little bit more complexity, because instead of having just the Series A and the Series Seed, now we have the Series B, the Series A, the Series Seed, and this pattern would continue on to infinity depending on how many rounds that you decided to raise. So in order to do this, I have all of my titles set up over here. You can go through and copy them, pause, and copy them. And here we go. So we're going to start on Series A, and we're going to start with number of shares owned. So number of shares owned for Series A, we can just go right up to the box right above this and capture the shares issued in that round to Series A, that 314,558. Then we're going to do the same thing for Series Seed and go right up here to the box, number of shares owned, 226,030. Those numbers aren't changing. We're not necessarily issuing more shares to those classes. While investors may be getting new shares because they're investing in subsequent rounds, the classes are staying the same. So after that, we're going to go down to the founders and options and do the number of shares owned for them, which would be what they had in the last round, plus the options issued in this round, which is the final option number, the 83,651 right there. So that's Series B options. And then we're going to go up here to the top and do amount invested. So we know that from the cap table. That's this number here, this $10 million. And then we're going to do pre-money valuation, which is also from the cap table. And that's $40 million right there. And after that, we're going to do shares issued, or we're going to do share price, I'm sorry. Share price, the 2110 from the cap table as well. And then we'll calculate shares issued, which is the amount invested divided by the share price, 474,027. After that, we're going to do post-money valuation, which is just the pre-money plus the amount invested. And then we're going to move on to total shares as if converted. So we're going to go all the way down to the bottom here and sum up all the shares that are now outstanding. So founders and options, Series Seed shares, Series A shares, and the shares just issued to the Series B. We'll come back in and do the ownership for each of them. So that's just the number of shares owned divided by the total shares outstanding. That's going to be the same for all of them. Oops. Plus number of shares owned divided by shares outstanding. And lastly, Series B. So we'll do shares issued. Changes the terminology a little bit there. Total shares as if converted. So that's 20%, which is correct because 10 divided by 50 is 20%. So after that, we're going to go into value right here. So the value is the shares issued times the share price, and like I said, that's just a check calculation. You'll see how it's used right here in a minute. So then we'll have value of Series A, that's that Series A shares owned times the new share price. And then now we'll use the value number from the previous box right above it to see how much value we gained or we lost. So the value of the Series A shares is now 6.6 million. As of the last round, it was 2.1 million. So we gained $4.535 million as a result of the share price increase here. So as if converted, it's the value divided by the number of shares owned, and that equals the new share price. So we'll do the same thing here. So shares owned, new share price, value gained or lost, and from the last round to this round is what we're doing, not from the beginning to right now. So the value now minus the value in the previous round, which was 1.508, value gained from round to round is 3.259 million. Then as if converted, just like the last one, back it up, So it looks the same. Same thing here for the founders and options. Like I said, once again, we did issue more shares to the founders and the options, so it's naturally going to gain a little bit of value. But overall, most of the value increase can be attributed to the increase in share price. So the value there minus the value of the previous round, 8.491. So we gained $20 million for the founders. And as if converted, still checks out. And the market cap, once again, total shares outstanding times the new share price, $50 million. So that is basically how all those calculations work with no dilution provisions. If you change the share prices and everything else, nothing would happen. No additional shares would be issued. So that's just how it works. It's simple. It's easy. But you're not going to see that very often in venture financings, angel financings, just simply because most investors prefer to have some downside protection if a round is raised at a lower valuation. Nonetheless, it's very important to know how all these calculations work, and that's the base level of knowledge for them. So now I can expand on them and go into the full ratchet calculations.